Bill here with the Metals Minute. Today is Wednesday, February 8th, 2023. Well, we have most of the metals a little lower this week. All the details are in the write-up. Gold is still leading the way on the one-year charts. And we have some things going on in the precious metals sector that's related to oil. And we'll talk about that in just a minute. But we want to issue a corrected report that came out of the World Gold Council just yesterday. They had previously reported, as did we, that there was record gold buying at the highest levels since 1967 by central banks in 2022. That report has been revised to say and to show that central banks purchased a record amount of gold, the highest on record of any period in history, in 2022. So that's a revision upwards of the impact that gold is having in the international financial system. Now, as we mentioned before, the last couple of times that the level of gold purchases approached the level it did in 2022 is when we saw a shift in the global financial system. Once was in 1971, following the announcement by President Nixon that gold would no longer be exchanged for dollars. And so that established a new financial reserve system based on unbacked dollars, or the petrodollar, the dollar connected to oil instead of gold. And then the Plaza Accords in the 1980s, and we saw a devaluing of currencies as part of an official exchange situation going on then. So we see this amount of gold being purchased again, and it feeds into the narrative that's out there about the global financial reset. So we'll keep an eye on that, but it appears that gold is not losing its place. It's gaining favor currently, and so that's another reason why it's a good time to be an owner of precious metals, as the metals are gaining favor. Now let's look at what's going on with oil. We see a worldwide recession appears to be looming on the horizon. Typically that indicates lower oil prices, and certainly since last June we do see lower oil prices, but the trend going forward, even though the world appears to be moving into recession, the supply of oil is more constricted than the demand is being diminished. So there's a greater supply issue going forward than there is reduced demand. So it's likely that we will see oil move higher. And the reason is, just like there's a new report that just came out that implicates the United States with details about how we blew up the Nord Stream 2 pipeline system between Russia and Europe, we've also been sabotaging our own energy supplies. Be it oil pipelines, or be it restrictions on gas and oil mining. These are things that are hampering our supply, plus the fact that we have not built a new refinery since 1977. So there's a lot of maintenance issues, a lot of downtime on these older refineries, and it's very difficult to get a new one built. So therefore, even though demand, the economy is slowing, demand may be reducing for oil, the price is likely to continue to rise. And as you're aware, whenever we have rising prices and a slowing economy, that's the definition of stagflation. And we last saw that in the mid to late 70s up until the early 80s, and that's when silver and gold multiplied in value by 5 to 8 times over a period, just a short period of years. And it's likely that we're entering another similar period. As you know, higher energy prices puts a floor under precious metals prices, because it takes energy to get that metal out of the ground and to get it refined. And therefore, higher energy tends to go right along with higher metals prices. And it's a lot easier to purchase and store metal than it is to store oil. So it's a great time to increase our stock of precious metals whenever we can. Thank you for tuning in. We'll see you again soon.